Hello and welcome to our financial market review. Last year's big winners in the financial markets were the United States and China. While at the other end of the spectrum, Europe, especially the Spanish and English markets, closed the year with a sharp decline. On the sector side, while technology made particular progress in 2020 and digitization will continue in 2021, it is likely that cyclical sectors such as energy, properties, banking, and defensive stocks will catch up in whole or in part. This reallocation in favor of cyclical stocks in 2021 will however be subject to the speed and effectiveness of vaccination and group immunization against COVID-19. Investors will probably remain cautious at the beginning of the year because financial market valuations indicate very high expectations but also great uncertainties. The beginning of the year is starting off with a bang on the macroeconomic front. OPEC Plus members are meeting today to decide on production quotas for the month of February. The context is all the more difficult between the price of the barrel back around $50 and the sanitary restrictions in force. The publications this week of the final figures of economic activities around the world for the month of December will be a good indicator of the effects of these containment measures. China published a slowdown in manufacturing activity in December due to falling exports and rising commodity prices. The impact on unemployment will probably be seen on Friday when the US unemployment figures are expected to rise to 6.8%. Finally, the US is implementing the first delistings of Chinese companies from the US market, including China Mobile and China Telecom. Even if the market capitalization in the United States of these companies represent a little more than 2% of their global capitalization, this raises the question of opening the Chinese capital market to compensate for this lack of financing. This important law for Trump should also soon have repercussions on Chinese oil companies. The last big unknown of the week is the result of tomorrow's senatorial election in Georgia, which could make the Senate pass definitely to the Democrats, leaving the way clear for the financing of infrastructures and the increase in taxes. What is taking shape, however, looks more like a Congress without a real majority, the investors' preferred scenario. Stay tuned for our next roundup, and until then, have a nice week ahead.